Hi everyone, we are back with another update about the Indian economy. My name is Rohini Sanyal and I'm the research economist for India at ISI Emerging Markets Group. Before we get started, to some of you who are not familiar with what we do at ISI Emerging Markets Group, we have been in the business of providing information on emerging markets for over 25 years. We have two brands, CIC Data and EMIS, that specialize in providing high quality emerging markets content. CIC Data provides macroeconomic data on more than 200 economies, while EMIS focuses more on company, industry, and country research on emerging economies. Now, since the GDP data for India was released on May 31st, I'm taking this opportunity to discuss a little bit more about the Indian economy, the last quarter of the financial year. I'll be referring to the quarter in calendar year terms as Q1 2021 throughout the presentation. The agenda for today is to cover these four main sectors. So let's get started with the first one, the real sector. The economy registered 1.6% growth year on year in Q1 2021, which was powered by favorable base effects, continued economic policy support, and a steady vaccination drive. However, the sharp rise in cases by the end of March, I beg your pardon, dented this economic recovery process, and especially due to local lockdowns across the country. Private consumption witnessed an increase by 2.7% year on year after 3 consecutive quarters of declines. Government consumption picked up as well, accelerating by 28.3% after registering a decline in Q3 and Q4 2020. On the investment side, there has been an increase of 13.8% year on year, primarily on the back of gross fixed capital formation that increased by 10.9%. Coming to the gross value added, or the GVA, that pertains to industry, witnessed the second consecutive growth of 7.9% after growing at 2.9% in the previous quarter. But the services sector registered an increase for the first time since March 2020 by 1.5% year on year. In terms of share, agriculture declined in Q1 2021 in comparison with the previous quarter. And under services, the category of trade, hotels, transport, and communication and services related to broadcasting increased its share in the overall GVA, almost back to the pre-pandemic levels. Now, to map the movement of the economy more real time, CIC has developed two key indicators. The CIC leading indicator that provides a glimpse of the economic trajectory, and the GDP nowcast that provides a continuous, almost daily estimate of the current and the next quarter GDP growth or decline. Now, these can be very powerful tools for monitoring the economy. Industrial production increased by a massive 22.4% in March on account of low base from last year due to the nationwide lockdown. Manufacturing output now, which accounts for 77% of the industrial production index, rose by 25.8% in March 2021 after contracting by 22.8% in March 2020. Now, core industries also saw a moderate increase over this quarter, Q1 2021, again owing to low base, but primarily driven by steel production and electricity generation. Now, coming to consumption indicators show sort of mixed signals. On the one hand, consumer confidence survey shows a decline, but at the same time, if I look at consumer durables production, which is a proxy indicator of consumption, has been steady in terms of levels, and it's even shown this huge increase in March. So now if I go to auto sales have also skyrocketed due to lows, and digital payments have also picked up. And yet at the same time, vehicle registrations have declined in Q1 2021. These contradictory points show that the economy is yet to reach a steady consumption pattern, and these are basically some volatile phases that are currently going on. Now, coming to the next segment, which is the monetary and financial sector. The BSE, which is the Bombay Stock Exchange Sensex, and the Bombay Stock Exchange Sensex 50 and the Bombay Stock Exchange, Sensex, Next 50 all reached this high, this historic high in Q1 2021. However, the stock market saw the highest foreign portfolio outflows in April 2021, totaling about 1.3 billion US dollars, as foreign portfolio investors sold stocks due to broad-based selling in emerging markets, stemming from an interest rate rise by the US Federal Reserve. Now, the 91-day Treasury bills yield spanned between 3.3% and 3.2%, but the benchmark 10-year government bond yield increased to an average of 6.3% per annum in Q1 2021. And this increase in the government securities bond has mainly been due to upside risks from inflation. This shows somewhat a cautious recovery of investor sentiment, but more data is awaited to come to a conclusion. Now, according to bank lending survey by RBI for Q1, loan demand strengthened for the third successive quarter. There was higher demand, especially in segments such as manufacturing, infrastructure services, and personal loans. And perceptions improved substantially for the infrastructure sector, where the loan demand went up from 19.6% in Q4 2020 to 42.6% in Q1 2021. Now, coming to consumer price consumer price inflation increased in Q1 2021 on account of high fuel prices, increasing commodity prices, headline inflation. The headline inflation eased in April 2021 thanks to lower food prices. However, there is a chance that this might get reversed because the wholesale price inflation has seen this huge upsurge. And in fact, you will see here that the wholesale prices have increased by some 10% in April from 7.4% in March. And the increase has been pretty steady since the last few months. So this shows that there are quite a few upside risks to inflation, and inflation expectations have also picked up as of the March 2021 survey responses. Now, this can spiral into something very adverse for the economy. Firstly, it could challenge the accommodative stance that the RBI has maintained so far, and we've not had any rate changes till date. But there is a possibility that if inflation spirals out of control, well, if inflation spirals forward, then there might be, the RBI might be obligated to increase the policy rate. So that's about it on the monetary and fiscal financial sector. Coming to the fiscal sector, we saw basically there was this huge widening of fiscal deficit, excuse me, thanks to the pandemic. So the fiscal deficit increased by 40.5% in January 2021 to 755 billion rupees, and by a whopping 236% in February to 1.2 trillion Indian rupees. Now, government receipts fell from 2.9 trillion rupees in December 2020 to 1.6 trillion in January, and then 1.2 trillion in February. At the same time, government expenditure increased from 2.3 billion in January 2021, to 3 billion rupees in February 2021. So the overall fiscal deficit for the year was actually more than 200% of that it was originally budgeted, the budget estimate. And for the whole year, it recorded the value of 9.2% of GDP, which is one of the highest ever for fiscal deficit. Now, coming to the tax revenue aspect, The goods and services tax was one of the key contributors to tax revenue for the whole financial year. However, it was income tax that contributed the most in Q1 2021. And again, interestingly, for March 2021, the goods and services tax collections was the highest ever for a month since the introduction of the GST regime in July 2017. This shows that there is this gradual normalcy that is coming into place despite the second wave that took over in the month of April. And hopefully this would aid tax collection in the future. The tax buoyancy remains good. As you can see here, that even though there was a fall in tax collection for FY 2020, we are seeing a moderate increase in tax revenue for 2021. So hopefully this would continue. And moving on to the external sector, we saw external sector is clearly showing signs of continued recovery. Merchandise goods exports increased by 22% on an average, while imports increased by 20.9% year on year. The trade deficit has widened in Q1 2021 to average about $13 billion US dollars. Now, in terms of trading partners, you can see here that China actually became India's top trading partner for fiscal year 2021, which ends in March 2021. And exports to China in this financial year 2021 stood at about 2.1 billion US dollars, and imports were, well, almost like 3 times, so 65.2 billion US dollars, which made China the biggest exporter to India. And the US, on the other hand, was the largest importer from India during the same period with imports worth US dollar 51.6 billion. So clearly things are again picking up on this side. International trade in services is also catching up to its pre-COVID trends, with exports and imports both increasing on a sequential basis in January, February and March 2021, thus bridging this gap between pre and, well, not post-COVID, but ongoing COVID numbers. So services exports have picked up on the back of the strong global demand, especially from developed economies that have rolled out massive fiscal support packages and are opening up their economies on the back of like effective vaccine rollout program. So this clearly bodes well for the Indian economy, which is a very high portion of services sector. And if all goes well, this would estimate to be continued over the next quarter as well. Now, coming to foreign exchange rate, substantial monetary policy expansion has sort of had this inevitable repercussion on the exchange rate, with the rupee's value slipping after the announcement, as move is expected to pump more liquidity into the market. Rupee depreciation has had significant implications when considered alongside rising commodity prices, as it makes India's import bill more expensive, and it definitely worsens the current account balance and the contribution to inflation. So this is something that is again not working well for India, the foreign exchange rate. With that, I come to an end for the presentation. But before we close, I want to quickly draw your attention to some of our flagship products that I will encourage you to review. We have the macro publications, the snapshots, the quarterly snapshots covers the largest economies. Then data-driven insights, which are insights on specific economies about a particular topic, and then thematic reports, which are theme-based reports, which consist of intra-country or cross-country research. And coming to overall flagship publications, the EMIS Insights Industry Reports, which is one of our EMIS publications, providing a comprehensive analysis of more than 20 industries in 17 emerging countries and regions. And the Foresight 2021 magazine, our regular annual forward-looking magazine, analyzing how key trends in key emerging markets will unfold to shape economies, regions, and the world. And finally, ISI thematic reports, which provide in-depth analysis of key macroeconomic and industry topics for both emerging and advanced economies. I will also encourage you to visit our dedicated webinar pages in EMIS and CIC, where you can find the recordings of all our webinars and register for our upcoming events. Thank you for your attention and stay tuned for upcoming webinars. See you soon. Bye. Okay.